Good morning. Welcome to PowerFeed, your daily market digest. Today is Friday. Happy Friday to everyone. September 7th, 2018. I am your host, Dan Russo, the Chief Market Strategist at Chaikin Analytics. Thank you all for joining us here this morning. PowerFeed TV brought to you today and every day by Chaikin Analytics in conjunction with StockCharts.com and StockCharts TV. Special shout out and thanks to them for hosting this show every day in the 9:15 slot. Just a reminder, you can follow me on Twitter. I'm at DanRusso_CMT. U.S. equity indexes were mostly lower again on Thursday. Energy was the biggest laggard on crude oil weakness. Technology also trailed again. Bond proxies and industrials led. Treasuries were firmer across the curve, and the dollar was lower against the yen, as you'd expect in a risk-off type environment, as well as sterling. Slightly better against the euro. Gold finished up 20 basis points. Oil down 1.4% after dropping 1.6% on Wednesday. Outperformers were telecom, UTs, and REITs, so they're your bond proxies. Underperformers were energy, tech, and financials. As we get to the desk this morning, futures are down 10 basis points, but off their worst levels. All eyes are going to be on the August jobs report, where economists expected to show that U.S. employers created 192,000 jobs in August and that the unemployment rate fell to 3.8% from 3.9% a month earlier. So we'll look out for that, which comes out at 8:30. Bigger picture markets, though, we tested and held support once again at that breakout level, 2873. So far, what we're going to do is we're going to call this a normal, healthy pullback after trading to all-time highs. What we want to see is that 2873 level hold. So far, so good. Support at 2873, 2800, 2734 is your rising 200-day moving average. Resistance, round number at 2900, and then, kind of high end of where we traded last week, 2920. RSI remains in bullish ranges, and Chaikin money flow remains bullish. So no real change to the picture here. We've seen these bouts of tech weakness before, or growth and momentum weakness before. They tend to get ahead of themselves. Those grow, Momo groups get a little bit ahead of themselves. A lot of froth and euphoria, right? Apple, $1 trillion market cap. Amazon, $1 trillion market cap. Everybody bidding up big cap tech, as well as high growth. Gets a little frothy. Need to take some air out of the sails. I think that's what we're seeing here. Obviously, we're going to keep an open mind, but as long as this 2873 level holds for the market, we think we're going to be okay. Stocks were mostly lower on further tech selling. We talked about that. S&P tests support at the breakout level. We talked about that. Oil weakness hits energy stocks. We'll get into that a little bit further. Today is Friday, so in my note to Chaikin Analytics clients, I look at some key themes. One of the themes that has me concerned is the high beta breaking down versus low volatility, and we'll explore that a little bit further. And futures do, in fact, point to a lower open. From a power bar perspective for the major indexes, though, down, not much of a change, 9-3 in favor of the bulls. S&P, NASDAQ, and small caps all have seen deterioration this week. S&P 500, 116 bullish or very bullish stocks for 72 bearish or very bearish stocks. NASDAQ 23-15, and the small caps have really deteriorated, 409 to 296. And you can see the small caps and NASDAQ were big underperformers yesterday. Definitely some risk-off type trading over the past few days. There, your bonds being bid, 10-year yield back below 2.9. According to the Chaikin Power Bar, small cap stocks and large cap stocks are somewhat bullish, and the major indexes have been trading mixed. Our stock of the day, PowerFeed subscribers, every day we generate a stock idea for you. It does not mean the stock idea is immediately actionable. That's where I'm going to come in here and now. Aris International, telecom equipment company, closed at 25.59 yesterday, up 20 basis points. Ticker symbol ARRS as a very bullish Chaikin Power Gauge rating due to attractive financial metrics, very strong earnings performance, strong price volume activity, and positive expert activity. When we take a look at the chart, I can say okay, but not yet. Very bullish stock, strong trend, strong industry. We know that this is the type of stock that we want to own. However, the tactical setup is just not there for me yet, right? Those of you who listen to this show every day, you know my process, and you should be able to look at this chart by now and know that this is not one that we want to buy here and now. We have the very bullish rating. but we're not outperforming the market. The market and the model are not in agreement. Our dynamic duo not in gear. Overbought, oversold, middle of the range, heading lower, not super compelling. And Chaikin money flow is actually bearish. Stock is above the long-term trend line. This is one that's, it's been in a downtrend. Maybe it's trying to form a base. Certainly not going to ignore it. Going to add it to a bullish watch list. And when all of the pieces are in place that set up a compelling entry point, we'll get involved. But, with S&P 500 still overbought based on our overbought, oversold indicator. Same with Russell 2, same with Russell 3, same with the Qs. I think you don't have to swing at every pitch, right? Warren Buffett says they don't call balls and strikes on Wall Street, so you can pick and wait for your pitch. I think Aris is an interesting name, but this isn't a pitch I'm swinging at here and now. Our sector tracker, movement over the last 5 days, and you can see the defensive posture, right? Utility, staples, and REITs are 3 out of the top 4 groups. Throw industrials into the mix as well, as they've seen a bit of a relief rally. Meanwhile, your risk-on groups like the new comms, tech, discretionary trading off, and energy, as we said, has been getting hit with crude oil. And we're going to take a look at oil, and we're going to take a look at energy a little further down the line. But it's interesting that our industry in focus today is the oil and gas E&P services group. And remember, this is one that I've liked, right? Within the energy complex, my call has been long E&P, long refiners, short the services names. However, over the past 6 months, that trade has worked out really well, right? It's outperformed the market by 15.4%. However, the power bar ratio, which measures future potential, is weak, with more bearish than bullish stocks. It is currently ranked number 16 of 21 subsectors, and it's moved down 3 slots over the past week. So I think that we're going to back off that call a little bit here. Not as aggressively. Listen, if you're going to trade energy, I favor E&P over services. I favor refiners over services. But if you're going to trade the entire market, I don't think there's a reason to get excited about these E&P names. Some of the indicative bearish names, COG, COG, that's one that I've actually called out twice as a sell idea here at Chaikin Analytics. PDC as well as Abraxas. Let's take a look at PDC. Abraxas is a $2 stock, so let's throw that one out the window for now. PDC is a very bearish stock with a weak trend in a weak industry, so we know that this is the type of name we want to avoid as a long idea and potentially look at some bearish trades. Market in agreement with our model. Here's the ribbon at the bottom of the screen. Very bearish rating. Lines up with this underperformance. We are in gear. Dynamic duo in gear. Market in agreement with our model. Overbought, oversold indicator closer to overbought than to oversold and rolling over, while money flow is bearish below a falling long-term trend line. I like the sell side in PDC Energy, ticker symbol PDCE, which closed at 51.17 yesterday. If you own this name, we want to get it out of the portfolio. If you play bearish ideas, maybe look for some put options, some bearish vertical put spreads, or an outright short of the stock. We don't like this one here. Sets up well for a bearish trade idea. Trending, yesterday's S&P 500 movers and shakers. General Mills catches a bid, GIS, as investors flock to some of the safety of the staples. CBS trades higher on talks that Les Moonves might be ousted. Royal Caribbean up 2.65%. I really don't have a good explanation for that one. Total System Services, TSS, is a recent long idea here at Chaikin Analytics. It's in the software and services group. Bullish rated stock up 2.5% yesterday in a weak tech tape. Tells me a lot. TSS is a name that we like. Look at SO as well, up 2.5% in a weak tape. Bullish rated stock, probably one you want to have on your radar screen. The loser side of the board, Micron down nearly 10%. Clack, Lam, these are your semis. We're going to take a look at semis relative to the market, and it's one of my concerns. For those of you who don't know, and maybe some of you do, every Wednesday I publish a note called Bearish Insights where I argue the bear case. It's a great new product that we've launched at Chaikin Analytics. And basically what I do is I say, all right, if we wanted to argue the bear case, here are the points that we would bring up. And within that context, we also have a bearish idea, right? Because it's a market of stocks, not a stock market. We want to own what's going up and we want to sell what's going down. Last Wednesday, Win was my short idea, ticker symbol WYNN in that product. Stock was $148 when I put it out as a short idea. Traded down nearly 9% yesterday to $127.85. We moved our stop down with an intraday alert. That's another aspect of the product, some trade management. So keep an eye on Win. I think that one heads lower. Lamb, concerning. Twitter getting caught up with the social media names, down another 5% plus yesterday. Our earnings update, Thursday surprises, and this is kind of interesting to me. Palo Alto and Avago are two kind of bellwether names within the tech space. Palo Alto in the software portion of the market, Avago or Broadcom in the semiconductor space. Both beat after the close last night, and both are trading up this morning. Maybe that gives us that sentiment shift that we're looking for in tech, right? Tech names have been sold. Two of these big names reported last night, and they're trading up this morning. Maybe that changes a little bit of the sentiment. G3 is an apparel company. Obviously, we know retail's been hot. Apparel's been on fire. They beat by 20 cents. Keep an eye on ticker symbol GIII, which has a bullish power gauge rating. No earnings coming up today. It is a Friday, and look, at the end of the day, we're out of the bulk of earnings season. All attention is going to be on the macro here this morning, as I said, though, with that jobs number coming out at 8:30. Oil weakness hits energy shares. Here's a chart of WTI, and I've spoken about it. I'm still giving the benefit of the doubt to the bulls on oil. And the reason I say that is, number one, we're still above the rising 200-day moving average, right? So the trend is higher by definition. Number two, the RSI for crude during these pullbacks has not been able to become oversold. Actually, even yesterday with the sell-off in oil, we didn't even get below 40. So that's encouraging for the bulls, right? In the energy complex, or if you're long oil. But listen, let's keep an open mind. I do not like the fact that volume is picking up on these down days. That is not encouraging. And I just kind of added in here the XLE at the bottom of the screen, and you can see how it's really been tracking oil. And the XLE, the energy ETF, has been rolling over as oil has chopped around and gone sideways. Again, I'm giving the benefit of the doubt to the long-term trend in oil because of the 200-day moving average and because the RSI can't get oversold. But again, we do not get dogmatic in our view. If we break 64, I will obviously have to reevaluate what I'm looking at for crude oil. And again, as I said, I write that note every Wednesday. If you were going to argue a bear case, this would be a data point for you. This is S&P high beta relative to S&P low volatility, right? It's a sign of risk sentiment in the marketplace. If high beta stocks are outperforming low volatility stocks, that's a sign that investors are showing a willingness to take on risk, right? It's gone sideways pretty much since February, and it's on the verge of a breakdown. So far, this support level has held for the ratio, but we are below the 200-day moving average of the ratio, and a breakdown here would be concerning. It's a data point. Right? A breakdown doesn't mean we turn around and sell all of our stocks. No, we look at it. We're building a mosaic here, but it is a data point that we keep an eye on closely. And every Friday in my Note to Chaikin Analytics members, I highlight this and other key themes within the marketplace. And another one that has me concerned, we've spoken about it here, semiconductors relative to the S&P 500, also on the verge of a breakout. And the reason this one concerns me a little bit more is because the RSI of the ratio is actually shifting down to bearish ranges, and that does concern me. We are below the 200-day moving average for the ratio, which has rolled over. So again, another data point. If you're bearish, or if you're inclined to be bearish, these are the things that you'd look out for. And if the market were to break down, these would be confirming data points. The way I'm seeing it now, though, market's overbought. Some of these negative data points are out there. I'm still a bull on the market in general. However, when looking for individual ideas, I want to be more selective. As Warren Buffett said, wait for your pitch. So get powerful, profitable stock ideas and more. Sign up for PowerFeed for free, chaikinanalytics.com/PowerFeedTV. And a special thanks to any of you who were on my webinar last night. Let me know if you're interested in a replay or any other information. I hope that everybody has a great Friday and a great weekend. See you back here on Monday. Enjoy the weekend, everyone.